Hey, good morning, everybody. Bob Trade Genius, the 5th of September. I'm going to talk about VXX, VIX, and the SPY slash ES, and why I think we're going to go into some very turbulent times over the next 45 days. So I'm first going to show you VIX, and some of the stuff's going to be a little bit, I don't know, complicated, but you kind of have to wrap your mind around the concepts because there's some derivations in here and there's calculations that create these answers. So the VIX contract is basically a calculation that's looking at out of the money puts and out of the money calls, and it's a continuous contract, but I believe it's looking out 30 days, and so this is they're looking at the out of the money calls and puts. So as people make bigger and bigger bets, outside the normal price range for the S&P, is that you start getting the VIX to rise. And so all of a sudden in August, even as the market was going higher, the VIX started to move higher. Now we've learned subsequent is that SoftBank has been, I thought it was the Feds, and that SoftBank was buying enormous amounts of out of the money calls on equities and probably the indexes too, basically driving up the FANG stocks, which are market capitalization weighted, which means that the higher your more your company's worth is, the higher it goes as the index increases. So it's kind of like the rich getting richer kind of a thing. And so you have a situation where you have an entity that was manipulating the indexes basically, for their own book. We can argue whether it's legal or not, moral or not, but it is what it is. It got to the point where the market makers they're forced to buy the stocks. That was the whole purpose behind it. Because when somebody buys calls, they're selling the calls, and they hedge themselves in the futures markets, and they hedge themselves with the equities themselves. So they are driving this thing higher. Well, they got to a point where they couldn't hedge correctly. If something turned around on them, they would lose too much money on the equities falling. So they started buying volatility indexes to protect themselves. So whenever you see in the future VIX rising with price rising, it should set alarm bells off for you, because that means the market makers are getting into a desperate situation. Well, it all came to a head on Thursday and Friday, and you had this big push up on Thursday. Now this Friday thing, and we made some good money on VXX on Thursday. Friday I entered again, and we got a little bit at the end of the day pushed down, but I'm here to tell you that this VIX move is far from over. VXX move, I should say, and the VIX move is going to probably continue to grind higher, because now that SoftBank has been identified and Tesla has been denied access to the S&P 500, you're going to see some pretty violent reactions now. People are going to try to front run SoftBank, and you're just going to start seeing what they say. This was called gamma long. They're going to start seeing gamma short, but the bottom line is they're going to be creating more volatility in the market, and just watch this thing go. So we have something here. It's proprietary to us. We don't even offer it out. Is showing where institutions go from sellers to buyers, and it landed right on the right at the buy to dip point here at the end of the day on Friday. And so our expectation is, if I'm right, that we'll see the VIX rise, because you'll start seeing these contracts out 30 days. So now you're looking at 4 weeks from the 11th. So you're pushing into the end of September or the first week in October. Those contracts start looking for open interest out of the money to go up. You're going to see the VIX go up higher. Okay, so that's that. So that's the VIX. So this thing oscillates. It's a closed loop system, and it's continuous contracts. So it doesn't have a bias. It's totally based on the level of contracts that are out that will create the balances or imbalances. So that's that. So now I'm going to show you VXX. Now VXX is a derivation of VIX, and what it is do I have the, yeah, I have the calculation right here. So what it looks at for its calculation is looking at the continuous contracts from the next Friday, 23 days out and 37 days out. That's important because VXX is not related to VIX. Like VIX is going up, sometimes VXX is going down, and people are like, I don't get it. It's because it's not looking at the continuous contract, it's looking out into the future contracts. And so it's looking at 23 days, it's looking at 37 days, and then it blends those to come up with like an equal weighting 30-day average. So it's looking out into the future. Okay, now that we know that, so let's go to VIX Central here, is that this is the curve. Normally, when you see a curve like this, is what's called a contango. This is normal, is that you expect to have more volatility into the future than the current day because the future is unknowable, so people tend to hedge that unknowable. The farther out you go into the future, typically you'll see the VIX curve go out 3 months higher and then kind of flatten. This thing's kind of ass backwards because of the election, and so they're calculating the VIX at 36 for the third week of October, okay, 10/20. So, and right now this contract is 9/15. So now what you do to calculate VXX is you take 9/15 plus 23, you're at 9/28, and then 37 days out from that. So there's 30 days in September, so 15 plus 17, 22nd. So it's looking at this contract pretty much here, and then here. So right now, the VIX contract is VXX is still fighting a little bit of a contango right here, but starting next week. So when this jumps out to the next contract next Friday, which it's going to, is that you're going to see this go into what's called backwardation. And that means that VXX, all things being equal, are going to go higher. So now you have two things going. So the VXX is going to look at what's happening with the VIX today as its baseline, and then it looks at the VXX out into the future, and they call it lifting the entire curve. And so that's what's been happening with VXX. If I had a way to show, you could see these over the last couple days. You'll see the VIX curve just keep rising, and then that way is telling you that basically the tide is coming in on volatility, and it's bumping up against a backwardation calculation. So I'm looking for VXX to explode here over the next 2 weeks, going into the September contract closing. And so that's how we look at the VXX. Now, what gives me that confidence is the two things that I mentioned. I'll go now to the chart here. So here's VXX. Okay, so VXX pushed up. It's in a buy mode. Came down, touched an interesting moving average for us, and I'm expecting this thing to turn right around to start moving back higher here. And you got to realize too, Monday's a day off for us, so there's going to be only way people are going to be able to hedge what's happening in Tesla and what's happening with this SoftBank thing is that if we go down Sunday, Monday nights in the futures markets, because they're still open, they're kind of short days, is that Tuesday could be a pretty bloody day in the stock market, and you're going to see a lift on VXX. If I'm wrong, then I'm going to be forced to close that VXX position, and then I'm just going to have to wait a week, and it's going to go up. But the second week in September is usually pretty bearish, so I think I have a lot of things going for me, and I don't think you can underestimate Tesla not getting into the S&P. The reason why Tesla, let's see if I have it here. The reason why Tesla has shot up so much is that there was an expectation for it to be into the S&P 500, and it was denied. Okay, So so you just have to look at this thing. When they announced this thing as they're being in consideration for it, I mean, this thing nearly did a double, okay? Which is just amazing for a company that is basically can't make any money and revenues aren't accelerating. So this was totally a speculative move, and now that its reason for rising higher has been eliminated. So a lot of times when these things happen, you're going to see these parabolic moves. They actually will come back. They call it the Eiffel Tower effect. And if Tesla goes from basically 418 to 270, and that's actually a misnomer. So let's go to the hourly because they got hammered after hours on Friday. So it closed at 417.93, and the after hours took it down to 391. So they took a bit of a hit after hours right here once they announced they weren't getting in. And so I expect further weakness in Tesla. And then, also we had an issue with, we had Apple too. So Apple has basically, since they've gotten their stock split, is that it's been on a downward trajectory. And this is a Friday kick save. So now what we have to see here is that if this wick gets filled, then Apple's going down too. This is a $2 trillion company that's growing 5% a year, that has grown. I mean, looking back here, this is the last 6 months. It's gone from $78 to $120, and so that's an amazing growth for a company that's not growing. So right here is natural support. So I mean that's a 50% drop. So just keep in mind how overextended they are, and the whole story you've been hearing about the Fed has the stock markets back. Found out we've been misled. Is that it was really confusing to me because the Fed's balance sheets had basically stagnated. In fact, it drifted down a little bit. And just because the Fed is pomoing in the market doesn't mean they're adding to the market. That means they're just replacing what they've already put out there. So they're just kind of rolling their contracts. So my head was really scratching on this thing. I just didn't know where the buying was coming from. I found out it was a SoftBank in a desperate measure to recoup massive losses it had with the WeWork debacle. So, going back here now, final chart, and I hope I'm being clear here. Sometimes it's hard to get stuff out of my head into my mouth here on stuff because I've been doing this for so long. Is that here's the S, extremely stretched, and these are pretty bearish candles here. Fridays, they always tend to bring back in risk. 2008, you can always just buy at 12:30 if you want to do an end of the day save job, and pick up some free money in the futures markets or SPY. Yeah, you can do that here because people have to close their books going into the weekend. Some personally, some voluntarily. And so I'm looking for here. So if this area breaks here, this 33.47, it's huge. And let me go to SPY here. Okay, so there's a line in the sand here at 342. I wonder which chart I use. I must have here it is. So I have it is SPX. So 3420 is kind of a line in the sand in terms of what's called the way the volume works here. If it pushes up, it's basically, hey, we're going to go higher. If it pushes down, it's going to be forcing selling. So it's kind of a volume line here, and way the people are going to manage their risk. So anyway, that's it, and so that's what I want to share with you guys today. I'm bearish. Okay, and the Fed is neutral in my mind right now, and this SoftBank thing is kind of unknowable. But if you were a big money guy and you knew somebody was hanging out like this on an edge like this, they're going to hammer it just like they hammered long-term capital management. So whoever exposed SoftBank to the world has just realized what a bonanza it's going to be for people to then take the other side of that trade and force SoftBank out of their leveraged option positions. It is not going to be pretty. You guys have a good one. I'll catch you later. Bye-bye.